Good evening everyone and welcome to Admiral Markets webinar today, 16th of February 2015. My name is Nenad and today we will talk about 5 different setups. Let me do a quick sound check before we begin. So Jörg is saying great from Beijing, sound is great. So we have a good sound. I just want to make sure that everyone can hear me so we can proceed. Okay, so today Euro dollar, pound, Australian dollar, dollar yen, and New Zealand dollar. We had a great week before this. We had a really great week. I will show you the results. We made more than we could have made more than 200 pips, almost 300 pips with these pairs. And yeah, Jörg is saying, and a lot of people, guten Abend, Peter. Yeah, a lot of people really thank me for last week's setup, and I'm really happy that last week's setups were really pretty much worked for you, and I hope this week too will be that great. So let's move on first to risk disclaimer, then we can proceed to webinar. Okay, online education materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting this risk disclaimer, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not a .co.uk website, but the globalnews.com website. Forex is risky business and this should not be taken as advice. It's a personal opinion only. This webinar is for informational and educational purposes only. So with having said that, just a quick reminder about our trades. So all session recap trades and analysis is done with Camerala MACD, which is my proprietary method for trading. The thing is, we are usually waiting for pullbacks. So we don't want to buy into resistance and we don't want to sell into support unless I'm stating that we do breakout entries. So you can enter within 5 to 10 pips of the predicted level if it's in agreement with your system. Okay? Always respect your stop loss. Always. So if you determine one particular stop loss, then you should respect it. Add the spread to your stop loss. Okay, so first respect your stop loss, then add the spread to your stop loss. So if the pair is having, I don't know, 2 pip spread or 3 pip spread, you should add those 2 or 3 pips to your stop loss. Usually when you make pending orders, you're adding your spread to the pending order buy position. So spread is added to a buy position and it's added also to a stop loss. If you're adding to a buy position, I'm talking about pending orders, then you usually don't need to do that with your stop loss. And if you're making a sell position, then the spread is only added to a stop loss. We take only one position, okay? Only one position. You usually take, I prefer positional trades. Positional trades are so-called trend trades, and we want to make a trade. We prefer to make a trend trade. Alternative trades are so-called counter-trend trades. You should also remember that. Then breakout trades and scalp trade levels are done independently. It can be a second entry. And I will show you last week how pound gave us breakout entry. So breakout trades and scalp entries can be done independently of positional or alternative trades. Okay, usage of trailing stop is highly recommended, and these setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. Scalp trade levels are calculated by historical levels and Camarilla. You can add these levels to your system, and definitely pay attention to my Twitter updates, because I will usually update my Twitter if something unexpectedly happens, or we want to, let's say, reverse a trade, then basically I will update it on Twitter. Then the term pips pool, it's the maximum available number of pips you could have got on recap entries. Okay, so session recap 9th of February 2015 results. Euro dollar was good for 70 pips, pound was good for 65 pips, Australian dollar was good for 30 pips, dollar yen didn't qualify, dollar CAD was good for 130 pips, and it makes a total of 295 pips pool. So that is the absolute maximum you could have made with last week entries and trades. Now, of course, if you made 50, 60 pips out of these 300, almost 300 pips, that's also a great result. Thanks to, of course, Admiral Markets, these webinars are free, and I'm here to help you and guide you through setups each week. And by doing that, really, I'm really happy that you're making money. Of course, everyday analysis is also included in everything which we do. So yeah, Jörg is saying 170 pips. Well, that's great. 170 pips, that's pretty great. Great, Jörg, I'm really happy for that. And I need to say, of course, follow also daily analysis, because that is also when I make, let's say, once or twice per day, I update the analysis and I publish it to the Admiral Markets blog, Admiral Markets technical analysis website, Forex Factory, and Forex Street. Yeah, okay. Trade of the week is dollar CAD. Definitely dollar CAD is trade of the week. 130 pips, well, that is pretty much good. So this is a new form of showing you the results, because yeah, my Twitter address, let's before we begin, my Twitter address is tarantulafx@gmail.com, okay? So that is my Twitter address, okay? I will write it down again. So guys, I'm really, I need to say that you should definitely follow me on Twitter, okay? It's, I write it down, tarantulafx@gmail.com. That is my mail, yeah, but my Twitter address is tarantulafx. It's pretty much simple. This is my Twitter address. And I need to say that if you follow me on Twitter, definitely you will see when I update the analysis, when I post new analysis, or when I make revised trade. Maybe from time to time there can be a revised trade from these recaps. It doesn't happen so often, but sometimes, guys, you know, that can happen from time to time, that we need to do revised setup. So these are the results for last week. So market plan euro dollar. Euro dollar is in downtrend. It was from the last week, and we waited basically for either a sell position or for buy position. And what happened is, this is the time of the webinar. You can see the time of the webinar, and the entry happened at this point here. You can see the entry here, and basically that was, yeah, 100. It was 70 pips, because target was 135.0 or 1.1350. Okay. You want to see bigger slides, I guess. Yeah, I will use that. Let me check this. Okay, I will use this slides. Okay. Okay, tell me now, do you see that the slides are bigger? I changed the display settings because I use two monitors. Great, so you can see the slides. It's bigger now. Great, excellent. Okay, thanks for reminding me. So this was euro dollar, so the entry was here, okay, the entry was here. Then you can see the price, bang, 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 it shoot it to the upside, and we made a total of 70 pips. Now I know that some of you maybe made a little bit more, but I need to count proper results, and proper results tells us that the total pip pool for this trade was 70 pips. Now let's move to GBP dollar. GBP dollar, webinar time, you can see the webinar time. Here, it's the webinar time. And we took a sell position. Okay, we took a sell position at this spot here. Look at this. At this spot, we took a sell position. And basically, well, I can say that this was also a good place to sell. This was also a good place to take profit. And then you can see great trade by pound. But I need to state once more, when I say if breakout, BO means breakout, so breakout trades can be done independently of these trades. So if you see also from in my future setups that I say breakout trade or BO trade, you can make one of these trades and you can make this independently. You can see that the breakout of 53.50, it happened at this point, was pretty much successful, okay? And I say it could go towards 54.85, but you can treat breakout as a scalp trade. So maybe you didn't make a full potential of this trade, okay? But definitely you at least could have made some 20-30 pips because breakout was pretty much successful. Australian dollar, this was the time of our webinar, and a buy position at 77.70 was activated at this point, okay? And you can see after the first touch it came to 77.97, so something around 30 pips. You could have made something around 30 pips, which is not bad considering that Australian dollar was really kept in a tight range. And you can also see from this slide it was ranging a bit, then it broke the range to the downside. But our first touch of the level, which we of course traded, was pretty much a good success. Okay, so this was the entry somewhere around this point, and this is where we could have made our maximum pip pool from that trade. Dollar yen didn't qualify because we waited for a bigger pullback. I wanted to buy around 170.60, you can see, but definitely we didn't have the chance to buy at that particular level because the pair didn't make a significant pullback towards this level. Now I'm saying also you can treat all of my analysis on these recaps as I'm giving you precise trends. So sometimes you can see, as in this trade, because how I trade, I always wait for the pullback before I initiate positional trade. For scalps, it's obviously different than for breakout trades. But for positional trades, I want to see a good pullback. It doesn't need to be a bigger pullback, but it needs to be a good pullback, considering the trend, considering the retracement, and considering confluence levels where I try to spot the entries at. Okay, so dollar yen was definitely an uptrend. So spot this. Okay, when I say it's an uptrend, then it's usually definitely then the pair is in uptrend. Yeah, now for all of you who sold, I didn't make any sell trade on recap. But guys, if you try to make an entry around this position, you could have made really a huge number of pips. Look at this. But I definitely wasn't making any shorts on dollar yen. It was pretty much strong, and it's still in uptrend. Doesn't matter. This is retracement. It's still in uptrend. And definitely, guys, you need to pay attention to this also. So it's in uptrend. If I say it's in uptrend, then the pair is in current uptrend or downtrend. This is pretty much can help you also to define whether you will be buying or selling in next 2 days. Dollar CAD, the trade of the week, the definite winner for this week, and my personal favorite. Really, this was awesome trade, awesome setup. So look at this position buy around 24.20, 24.00 stop loss, guys. 20 pip stop loss. Look, this is really what I'm proud of my Camarilla MACD. Really, look at this. Only 20 pip stop loss and 25.50 was the target. And it came straight through the target, even breaking through the target. But 130 pips with only 20 pip of a stop loss. That's awesome. That's 6 to 5. That's 6.5 to 1 reward to risk. But it doesn't happen always, as I say. Sometimes that reward to risk is not so important. If you, for example, have a good system, a good method, and that method is 70 or 80% accurate, then you don't need to make 2 to 1 or 6 to 1 reward to risk. Usually every second entry can be stopped out, so you're still positive, even if you don't make 2 to 1 or more reward to risk, because I usually keep my stop loss tight in between 20 and 50 pips. So dollar CAD was really a good trade. Now this was the recap of last week. Now we can definitely move on to recap of this week. Then this is euro dollar. So euro dollar is in uptrend, and what I want is definitely this can be activated as a buy trade, but have in mind that stop loss should be at this level. Okay, stop loss should be put at 12.95. If you're buying, now it's 30.70, so this was qualified for the entry. Target is 50, but stop loss is 12.95. So please, guys, this is, now I know that it's a bigger stop loss, but the target is also bigger. And this week, considering what happened in the last couple of weeks, I think that euro dollar is still in bullish phase, and that 50-50 can be reached. Okay, so definitely, if you want to take this setup, now is the time, but stop loss should be this. So please use low risk. 0.5 risk is recommended. Scalping levels to buy, if it hits stop loss, is 12.70, and if it tries to reach this level, this is a sell trade. This is scalp only. So if it reaches this level, there is a big chance that it will go through and hit this level, but on the first attempt, I think it will be sold because it's a good historical scalp level. Okay. Now let's see euro dollar here from this perspective. So it's making a pullback. You can see it was hit. So 30.61 was hit. This might look like head and shoulders, but have in mind that daily is pretty much, it looks bullish on daily time frame. If we pull this trend line here, look at this, and it started to make equidistant channel. Okay, I will show you. Okay, look at this. It started to make an equidistant channel on daily time frame, guys. So yeah, I know that there will be opportunities to short into this pair, but judging from intraday perspective, from intraday, intra-week, I can say, because these trades are valid for today, tomorrow, and day after tomorrow. Look at this. It really tries to go up. And definitely my stop loss is below this range here, this channel low. And I think that there is a big possibility for this trade to develop in our direction. So, but please have in mind that all of these setups now, today is US President Day, so there can be a possibility that they are dropping the price just that the price will be bought a little bit later, guys, okay? So they are now adjusting the price maybe for a next buy position. That can usually happen with trades which are based on holidays, and you know my opinion about holidays. Do not trade during holidays. You can make a few scalps here and there, but not any big trades. Okay, but now we are already at the end of day, so we will see if this trade will go in our direction. But also my pending was activated, and I am here long on this pair, putting my stop loss here where it's set to that it should be 12.95. 0.5 risk is suggested. Okay. Yeah, you can enter now for a better price, definitely. But guys, please, a stop loss is a big now for this one, because you look at this. We are having a big range on US dollar. Look at it. This is a big range. So because of that range, we also need to have stop loss. And stop loss should be at 12.95. Okay. Okay. This is stop loss. Now, if you enter, adjust your risk according to your stop loss. Your risk should be always the same, guys. Okay, your risk should be always the same. Okay, so stop loss is 12. I will move it. It's 12.95 for this trade. Okay, so stop loss is 1.1295. Okay, and adjust your risk. I will trail the stop definitely after 30 pips. If it goes in my direction, I will trail it after 30 pips. And have in mind that this today, as I say, is US holiday day, and definitely I made a post about it on Spider's Den. When there is illiquidity in the markets, only a single big money trader is enough to make some changes for that particular day. So only one hedge fund trader who is trading with a big money is more than enough to make some irrational moves in the market when there is illiquidity. Because maybe this movement in normal market conditions would not be so strong, because you can see euro was at 14.12 and now it's 13.65. There is no big catalyst to this move, but definitely there is some market maker who is pulling the money now and who is trying to lower the price. That is always when we trade, when some trades, and when we trade during the holidays. So that is why I always say to you, it doesn't matter how you trade. If you don't use proper risk, you will lose in some time. So do not do that. Okay, always keep your risk minimum. My risk for this trade is 0.5. It's just, for me, it's usually the same whether I trade 30 pip stop loss or 50 pip stop loss. The risk is always the same. I'm just lowering my entry position. I'm just lowering my entry volume traded. Instead of using, let's say, 0.7, I will use 0.3. So it doesn't matter. Okay. Now let's move on to pound. Pound. I think it was also, or it's close to be qualified. Yeah, pound dollar is 53.50. Again, stop loss should be 59, 52.95, and 54.50 is the target. Okay. Sell could be executed at 54.85, 55.05 is stop loss 54.50, but this now is very close to be qualified. Again, I'm saying for GBP got a boost in the back in last night because one of the members of Bank of England, I think it was not Carney who said that, but it was one of the prominent members of Bank of England, and he said that rate hikes can come sooner than expected, guys. So what we are trying to do is here to also capture that possible movement in that particular pair. Okay, so let me show you this. Sorry, I will show you now the screen. Okay, so here is the screen. For pound on daily, you can see a big candle, and also this was the breakout of this candle high. Okay, and now the pound is trying to reach that famous 53.50 level, but definitely it's qualified. And look at this. I consider that this was a previous breakout point. So this breakout on daily level is very important here. Look at this. This high here, 53.50, it was broken here. Now it can be retested, but the stops, as I said, should be to the downside. 52.95 should be the stop. Okay. This was a momentum candle. This was a big strong candle, and that the pair could go to 54. Again, as I say, it can make even a 55. Okay, but 54.50 should be definitely the target if we opt for this entry. Okay. This was from the previous week, so we don't deal with it. Australian dollar, I don't recommend trading Australian dollar today. Definitely, because we will have Australian dollar policy meeting minutes. What I can say, you can trade at your own risk. From the trend perspective, Australian dollar is long because it's in uptrend. 76.90 in normal circumstances, this could be it, but I will not trade. Okay, so I will not trade Australian dollar. As I say, trade it only at your own risk, guys. Okay, I will show you now. Okay, sorry, here is the screen. Okay, Australian dollar, guys, look at this. It doesn't look bearish. Why it doesn't look bearish? Because you see a cup and handle formation, bullish here. Look, this is the handle, and it still is bought into. Look, okay, even from this perspective here, and look at this V-shaped reversal here, but also handle, so it's cup and handle here, all up to here. So it's bullish, but I won't be trading it, guys, simply because we will have meeting minutes which can move the price. Okay, in normal circumstances we could trade it. Yes, and Australian dollar is also keeping an eye on the oil market, copper also. I don't know, guys, if someone of you trade oil, copper, metals, but definitely Australian dollar is moved by oil and copper, especially copper. So some news which basically move copper and can also move Australian dollar. So please if you want to listen to me, I wouldn't trade Australian dollar just because of meeting minutes, but from trend perspective, definitely this could be the entry here. If the price pulls back to this region, it's tight stop loss, 30 pip stop loss, and it can shoot to the upside. But definitely you should consider, if you ask me, not to trade just because of those meeting minutes. Okay? Oh, euro dollar, we are in the trade. Cable was qualified, but stops, as I say, should be really as I explained here why they are big. Okay, look at this. Pound is having a stop at 2.95 and euro dollar is 12.95. So guys, if you want to trade the pairs, please just use a low risk. This is how I trade. 0.5% in a single trade. So if I'm in of all of these trades, my risk is only 2.5% for 5 trades. The only exception when I make bigger risk is when I scalp. But that is another story. We're making here intraday positional trades. Okay? So Australian dollar, it's monetary policy meeting minutes. Okay? Please trade at your own risk if you trade. This can be the setup. But I'm not favoring anything just because of those meeting minutes, which can really screw our good setup. Dollar yen is in uptrend, definitely, and I'm looking to buy at 170.90 with 170.50 and targeting 118.50. Possible buy can come at this level, but it's a scalp trade only. It's a scalp trade only, okay? And dollar yen, I will show you dollar yen now, okay? Sorry, I will do it exactly now. Dollar yen, here, dollar yen, okay? You can see the dollar yen now, okay? So this can be head and shoulders, but do not underestimate the power of this pair. Because look at the past. It was really looking like it was bearish. One swing, second swing, third swing, fourth swing. Then there was correction, but it was really looking bearish. Making lower highs, even lower lows. And then there was NFP, bang. Look at this. To the upside. Straight to the upside. Bang down. And now it's around this level, which is good for scalps. But I want this to be a buy entry around this place here. Okay? It's a deeper pullback from NFP. So this was NFP candle. This was after NFP high. And now I'm waiting for 78.6. This can be a scalp trade, but we also had almost a scalp trade. But yeah, 80, 32, 30, 35 can be treated as a scalp. I recommend 30, of course, level. But for positional trades, I recommend 78.6. Because even if it doesn't want to hit 118.50 again, this is the level where we should see some reaction, at least 40, 45 pips towards 180.35. Okay? Now this level can also reject price to the upside, but I'm saying today, guys, it's bank holiday, so now there are market makers who are moving the price because there are no banks to protect the levels. You know what is the problem if you trade in low volatile market and where is illiquidity in the market? There is no bank who can defend, support and resist the level. And that is why we see a huge drop now in euro dollar. That is why I made a big stop loss, considering that today is also not just big range, but today is also US President Day in US. So USA is having a holiday. It's a President's Day, and there is obviously market makers now moving the price because banks are on holiday. Remember this, guys. Remember this for always. When banks are on holidays, other market makers are moving the price. We don't want to trade when banks are on holidays. So that is, if we make some setups, we need to use bigger stop loss and lower risk. Okay, I don't think that euro dollar would have fallen down from today's highs to 30.55 if it was a normal condition day, because now even with a smaller amount of money, those traders which are trying to exploit the holiday are moving the price. Okay. No, yeah, Greek. Now I know that everybody is talking about Greek exit, Greek stay in Eurozone. But guys, I think that everything will be solved. Really, I also think that there had been everything has been priced in. Really, now Eurodollar is trying to recover. It might eventually fall down. But definitely there were some meetings even before we knew about Greek exit by the President Spiras and European Union officials. So I think that everything has been prepared. Now details are remaining still, but everything has been prepared for this kind of meetings. So I think that everything now really, it doesn't matter. They will come to a solution either way. So we will see what will happen. But guys, that is why we use low risk and we don't use a small stop loss in these occasions. Okay. Even though if the agreement has already been a pre-made before these meetings are officially begun, I think that European officials know that there should be a close solution to the table. I don't think personally that Greece will exit European Union. I don't think that it will exit European Union because it will be a domino effect to all other countries who are also having troubles with people wanting to go out from European Union. I think primarily on Spain, Italy, and few other countries, not including UK. But UK is another story. UK is a United Kingdom is much stronger than it's Spain or Italy. It's much stronger than Greece. It's one of leading countries in the world, and they really do not have anything to do with exiting from European Union. Even though, Portugal also. Even though their prime minister is saying, Mr. Cameron is saying that there might be possibility for UK to exit from European Union, but now it's not the moment. It won't happen for UK now, but for Greece it can be a domino effect. Okay, so that is why I think that there should be a solution, because this president Spiras, he thinks that those austerity measures should be renegotiated, but I think that he is a person who actually wants to stay in European Union. He's not for exiting European Union. He's just for basically renegotiating austerity measures. So there are two different things: exiting from European Union and negotiating austerity measure conditions. So in my opinion, that could be solved anytime soon, but we need to wait. I don't negotiate in anyone's name, so we need to wait for actual thing or news to happen and to see where it will lead to price action. But yet again, I'm saying, guys, this move now is not governed by banks. This move is governed by other traders, hedge fund traders, who are moving the market because there are no banks to defend the levels. Okay. And now definitely I want to show you New Zealand dollar also. Okay, New Zealand dollar. It's in uptrend, and we could see a buy position around 74.80, 74.60. Very tight stop loss, guys. Very tight stop loss. And 75.50 could be the target. Okay, I will show you the slide. I will show you the screen now. So 74.80, 74.60, 75.50 is the target. Okay. And let's see the screen now. New Zealand dollar. This is New Zealand dollar. And guys, what I see here is a big uptrend. This was the crucial level. Okay, definitely this was the crucial level, 74.70. Okay. If it's a retest, it can be a buy. You can see that it made a gap here. Look at this. And it basically, when the gap was open, it was still not closed, but I don't think that the pair will really try to go down more than this one. So I effectively will be moving. It is better to place a stop loss few pips below this double bottom. So 74.45 will be, it will be corrected here. Okay, so guys, please use, I will correct this later, but I will tell you now it's stop loss here. It's a stop loss here. So guys, 74.45 is a stop loss here. Definitely 74.45 is a stop loss. I will correct this later. Let me tell you what I think, why I think that New Zealand dollar should be bought. Okay, I will move to my other screen now. Okay, here it is. So look at this. Now it's still being bought into. Look at this. It's still being bought into, but this level here, if it comes here, 74.70, 80, so around 88.6, it's 74.80. We can expect the pair to hit this level and jump. If it wants to close the gap, it will close the gap, but this level should not be hit if it wants to be still in uptrend. So it's still a good possibility to trade, and I think that in this particular occasion we have the chance to further make some pips buying New Zealand dollar, because definitely New Zealand dollar is in uptrend. Okay, now you can see euro dollar is jumping. Now pound is jumping again. It came to our entry zone. It came to 53.55, I think, and now it's 66. So we will see. We have a big stop. We will see. 4 hour. It's retracement. Daily is huge buy here, because all of these sells. Look at these pins. These pins are indicating sells. These are all broken, guys. 1, 2, 3, 4, 5, 6. 6-time top was broken, guys. Okay. Do you always rely on support resistance levels and not wait for candle confirmation? Greg is asking. Yes, I'm trading Camarilla MACD that particular way, because I'm trading the price. I don't trade confirmations. I'm trading the price, because if you wait for confirmation, you will usually be late in the trade. Okay, that is why I'm trading the price level, price zones, price levels. Okay. If I would wait for candle confirmation, I would be pretty much late in the trade. There are some exceptions, of course. When you trade breakouts, you can do it in three different ways. Different ways for trading breakouts are trigger happy trades, breakout retest, and breakout pullback continuation. Greg is saying true, but isn't it a bit risky? Well, Greg, if you're trading price action, then that is the only way. Yeah, you've been burned. I don't know which method you've been trading, but this Camarilla MACD is pretty much, I can say it relies on I don't think that you traded Camarilla MACD because you wasn't my student. I don't remember you as being my student, so you definitely didn't trade Camarilla MACD. Camarilla MACD is method which I have created personally, and it is not freely distributed over the internet. So everything which I do here on session recaps is basically Camarilla MACD setups and entries, and not just support and resistance levels. I'm trading confluence, so I make trend lines, I'm making Fibonacci, and I also rely on chart patterns, not just support resistance. Because if you trade only support or only resistance, you will definitely lose, Greg. That is the ultimate truth. There is no 100% accurate method. The thing is, you need to combine support and resistance, different perspectives of support and resistance. Trend lines, Fibonacci level zones, previous historical sellers and buyers. If you don't look to the left of your chart to see if there was historical buyers and sellers, you will again lose. You need always to spot historical buyers and sellers at that particular zone you're trading. Support and resistance levels are not enough by themselves to grant you a good entry. I have also traded back in time. It was the method which I also created. It was called practical naked trading, and basically Camarilla MACD is updated practical naked trading, because it takes other things, not just support and resistance levels. It takes previous historicals, buyers and sellers, near term, now moment buyers and sellers, historical levels, trend lines, intraday Camarilla levels, and when you all combine into one, I call it point of confluence, you get an entry. You get an entry. Yes, Greg, I'm not sure how many times you have visited our recaps, but I'm always, and I will always be posting results. So far in this, that was the first time, yeah. If you joined at the start of this webinar, you could have seen that I always do a recap of last week. Okay. This is, guys, just for Greg because he is the first time here. So this is always which I do. This is the slide which was copied from my plan, and then I show you the webinar time, the entry, and usually these entries are pretty much accurate. Now I say, that is why I always say, go with low risk. Do not use 5% risk in a single trade. That is nonsense. You need to use low risk, because you never know what can happen in the market during these market hours, guys. Greg. So just use low risk and you will be safe ultimately, okay? We will see. Yeah, no worries. So I will roll on through these slides again, so you can definitely snapshot the screen if you want. I'm still paying attention to the price, and I still think that the price might go in our favor for these pairs who are currently in session. But as I say, so far we haven't made any single loss from recap entries. But of course there can be losers from time to time, but overall we have been very, very positive about all these, from all of these recap trades. Okay. So just let's see what the price now. Also, dollar yen is making a pullback towards the level. Okay, 170.90. We will see. Maybe it will also come during Asia session. Okay, so this is euro dollar. Now this is pound dollar. Euro dollar, pound dollar, Australian dollar, dollar yen, Yeah, and losing belongs to trading, as Jörg is saying. You just need to know how much you're prepared to lose. That is why I always say, guys, you need to adjust your risk to according to your stop loss. So your stop loss should be, I even trade with less than 1% of risk. Okay, so yeah, I will show the first two slides. It's euro dollar. So this, obviously you can make an entry now. It's 13.55, but this should be your stop loss here. This should be your stop loss here. Definitely. Pound, which is pretty much strong. And Australian dollar, I will not trade. I will not trade, definitely, this. But if you want to take a chance, you can do it. Dollar yen, New Zealand dollar. Okay, we will see what will happen. And definitely follow the next analysis on Admiral Markets blog, Admiral Markets technical analysis website, Forex Factory, Forex Street. Yes, Greg, this is only once a week, but please follow me also on Twitter and on admiralmarkets.uk website. I post under technical analysis, and each single analysis of mine is having and will always have a watermark, because I don't want other people to go with my analysis and then to sell it over there. I do it for you, I do it for Admiral Markets, and of course this is what I also do for myself, because I also trade. So Forex Factory, Spider's Den Thread, Forex Street, admiralmarkets.uk technical analysis, and Admiral Markets blog. Okay, so guys, please, as I say always, take these things which I'm saying into consideration when you trade. Do a low risk trades, and even if you lose, that will be really, really low risk. You're not gamblers, and you want to trade as a pro, not as a gambler. Gambling is different kind of trading. Yes, I analyze all pairs, Greg. I definitely trade and analyze 25 of the pairs, and you will always see other setups: GBP New Zealand, CAD Yen, CAD Swissie, I don't know, Euro New Zealand, whichever I find to be interesting. Okay? Yeah. So guys, thank you again. We will call it a day now. Yeah, I tweet, and one more question, definitely, Greg. He's asking, do you tweet when you see a setup? No, I don't. I'm not a signal service provider, but I always tweet when I make an analysis, or where I suggest, for example, taking some number of pips after the analysis and all other things. No, then it's not a lot of questions. You have the right to ask me whatever you wish, if it's connected to trading. So definitely I'm always tweeting about trading and other things which are related to trading, sometimes some fun things, etc. But definitely when I make setup and when I post it on Admiral Markets blog, admiralmarkets.uk.com website, and Forex Street is tweeting me also, so you can always see the fresh analysis, and always pre-fact. I never do any analysis after the fact, because it's not used for you to know what has happened. You need to analyze what can happen. Okay, so that is why I'm always relying, and I will be always doing pre-fact analysis. Okay. This webinar is called Weekly Forex Recap, and this webinar is always once per week at this particular time. Okay, so it's always 6 o'clock my time. It's GMT +1. Obviously London is 1 hour before my time. So definitely, Greg, you're welcome here and follow the analysis and recaps. So guys, thank you for listening to me. I will come up tomorrow with another analysis, definitely. And at 1 a.m. in Beijing, yeah, Jörg is saying 1 a.m. is Beijing, China. Okay, guys, thank you for listening to me. I wish you a great week ahead. We will talk soon. Thank you, everyone, for good comments, and trade safe. Cheers.